It's not just about going out and doing impact investing and social entrepreneurship and let's just do more. There's a bunch of knowledge we don't have that we need to have to change the way we do our economy, the way that we do policy and that kind of thing.
Purposely Podcast, speaking with social entrepreneurs and charity founders and leaders, people who are making the world a better place. Here's your host, Mark Longbottom.
A very warm welcome to Purposely with Jamie Newth, founder of Soul Capital. An academic and an entrepreneur, Jamie is one of the key exponents of impact investing in New Zealand. Different to philanthropy, where donors give money to do good with no expectations around financial return, impact investing combines financial returns with expectations around positive impact, whether that is the environment or society. In New Zealand, impact investing is a relatively new phenomenon, small marketplace. You will hear how Jamie has literally put his house on the line to help grow this marketplace, to set up his first fund and help prove the concept. Enjoy this episode. I certainly did. And don't forget to share with friends and family. Thank you. Jamie Newth, welcome to Purposely Podcast.
Thank you, Mark Longbottom. It's a pleasure to be here.
You are the founder and CEO of Soul Capital. What's its mission and purpose?
Well, Soul Capital exists to act at we like to say at a systems level, or thinking in the big picture about trying to contribute to an economy that is more sustainable and inclusive. So thinking about what are the institutions and the norms and the systems that have led us to a place where our economy doesn't work for everyone, doesn't work fairly or equally, and at a systemic level degrades the environment and is taking us beyond what our planet can endure in a way which I think most of your listeners can probably relate to. And so that's the overarching mission or purpose. And then when we have that as a starting point, that leaves you with quite a range of things, activities, strategies that you can deploy to try and achieve that, which can range from impact investment fund management, which is one of the things we do, through to new knowledge through research, through convening conversations, to disseminate knowledge and to generally overall agitate an ecosystem so that we change what's normal.
So social impact investing is an overarching term and one of the first in New Zealand?
Yeah, that's right. So, and this is a little bit about me as a founder, I guess, in that, which I guess you may dive into, but I found that from a career perspective, I knew that I wanted to, lead my own ventures, or to at least be self-employed. And through a series of career kind of decisions and things that I did, led me to the point where I realized that I wanted to, dedicate my energy to that mission I mentioned. But one of the things that was missing in terms of having a sustainable and inclusive business ecosystem, was the aligned capital to enable entrepreneurs and innovators to take. Those are the people and the projects that will take our economy to that more sustainable and inclusive place. And what was very clearly lacking, particularly in New Zealand, was that aligned capital which is aligned to their social and environmental agenda, while still being commercial in nature. And that type of capital we call impact investing. There's lots of different assets and types of impact investment, but the initial focus was on impact venture capital, I guess you would call it. And yeah, so one of the first in New Zealand, when I first started agitating and trying to do what became Soul Capital, I struggled to find people that knew what I was talking about, and a lot of people find it heretical to try and blend the machinery and the work of investment with that of trying to achieve social and environmental impact simultaneously.
Just touching on that in terms of where that fits and matches up. So it's closer to philanthropy than investment for a financial return. So it's this idea that you get a social return with a financial return together potentially, and there's different variations of that. But it's closer to philanthropy, would you say, sometimes?
Debatable. It's certainly in the middle. It's between the two. And so if you Google impact investment, just like if you Google social enterprise or social entrepreneurship, you'll find a spectrum. And the interesting stuff in the middle of that spectrum between traditional investment and philanthropy is flavors of responsible investment, sustainable investment, and impact investment. So yes, it's a good point, Mark. Let's clarify what we're talking about here. It is financial investment for financial return alongside a social and environmental impact. and that you have to do that intentionally. It should be done in a way which is additive to what would have happened anyway if you didn't invest, and those outcomes that you're investing for, the social and environmental, should be demonstrable, and you should have an intent to try and measure those things to have integrity.
Yeah.
So that's a relatively well accepted definition, but we open up that black box, and there's a lot of different flavors in there, and so there's various different investment instruments from the early stage venture capital kind of thing that I was talking through to housing, loans, and everything in between. So to your point, is it closer to philanthropy and investment? It depends, and that's a strategic decision really from the investor as to whether they want to be more finance first, so that yes, they want to have an impact, but with no kind of concessions to their financial return, through to actually we want to really prioritize the impact. The financial returns can be secondary. So it can be a bit of a misnomer that impact investing is by definition lower financial return. That isn't the case, except where it is, and where it is, that's intentional because you need to have a lower financial return to enable that impact. So it actually covers a really broad range of investment strategies.
And I want to really get into your founder story of Cell Capital. But before we do that, I just want to dive back into your career and your academic career. So off to uni to do a degree, anticipated you'd become an academic, or not like that at all?
Not like that at all. No, I went to university and did the ubiquitous Bachelor of Commerce that many New Zealanders do. And the only thing I really knew through that degree, it was like I was saying before, that I wanted to probably not get a traditional job per se and be a quote unquote entrepreneur, because what I knew about it and what I'd studied and that kind of thing kind of resonated, but had the misfortune of not really having any useful specific skills, which has led me to be very much a generalist. But yes, an undergraduate degree and then a master's degree where my research focused on entrepreneurship.
Had you shown signs earlier in life, like when you're a sort of younger kid or teenager, that you had a sort of passion for being an entrepreneur? Or
that's a good question. I can't recall any of those anecdotes of selling lemonade on the corner kind of that you hear, or doing anything you can to exercise that entrepreneurial muscle. I mean, where all my passion really was as a young person was with sport. In particular cricket. So that was where any extra energy really went. But it wasn't until I started, actually getting educated and learning how the world works that this thing, entrepreneurship and innovation, really kind of resonated. And it's once you kind of get that bug, it's a difficult thing to put down.
And is it partially around desire to be in charge of your own destination? Do you remember that being a driver early on in your life?
I think there's certainly an element of that, of being able to control what you do with your life, yes. And that was something that stuck out from an early age, that it wasn't necessarily about profile or wealth or egoistic kind of things, but it was wanting to have control over what I did with my life. And that's a double-edged sword, by the way, when you get into the research of entrepreneurship. It's not all roses about being able to control what you do with your time. There's massive downsides as well. So yes, there's certainly a desire to control my own destiny, so to speak, and that in many respects would probably make me a pretty mediocre employee or problematic employee, but does give you the drive to do that hard mahi when it comes to doing your own thing, launching your own venture.
Yeah. And so found yourself diving deep into the topic and the theory. And tell us about that period of your life, finding that the information came quite naturally to you, the thinking behind it made sense.
Yeah, and I think it's partly because I've kept a foot in both in academia and as a practitioner in industry throughout, from postgrad through to now. Yeah, going deep into firstly, what makes an entrepreneurial team in particularly so powerful, and how do you harness the potential of multiple entrepreneurs working together, and about what entrepreneurs then achieve in society in aggregate, what difference that they make and what they can make. And that really is the leaping off point to my PhD in social entrepreneurship, and then Cell Capital as a venture, albeit being a financial one, because you kind of realize what entrepreneurs are trying to achieve or achieve in aggregate is change. There's lots of definitions about what entrepreneurship is and what it isn't, and whether they're born and whether they're made and whether you can learn it, all that kind of thing. But the thing for me is that if you create and pursue new opportunities, you change things. And what became really apparent to me is I was really interested in change that is not just economic, not just growth. It's change with a purpose. It's change with a direction.
Yeah.
And you can see there the potential power of social entrepreneurship. If we start bringing that purpose into our innovation entrepreneurship at a systemically or at a economy level, society level, that's going to be one of the key drivers to an economy that we can actually be a bit more proud of than we've got at the moment.
What was the sort of motivation? Like, what were you seeing around you? What examples, were there negative examples that made you think there's another way to do capitalism that motivated you to take your research in this direction?
Once you start thinking, and this is, I guess, an academic training or an academic kind of discipline, is you start thinking about why do we get these outcomes in the aggregate at the macro level? Why? And you dig into, okay, we're not just a population of terrible primates. Everyone's doing what they think is right and doing the best that they can generally. And you understand, well, why are those the incentives and the motivations we have? And you say, well, actually, this is the way we're getting exactly what we designed for. And this can get very boring and very academic pretty quickly, but there's these institutional logics which are driving behavior. And so it wasn't a particular entrepreneur or a particular innovation or a particular venture that said, hey, that's what I want to do. There are many, because lots of inspirational stories of that kind. But it was, and the reason why I ended up on the investment side of the table, despite not having the appropriate skills to do that at the time, was because we actually need to do this not just at a particular innovation level or a particular venture or product. We need to change what's normal in terms of the way that we do investment, the way that we do enterprise, which is a pretty grand kind of sentiment. But that was the realization coming from a scholarly perspective that actually the systems we've got, which take our economy where it's gone, reinforce what's normal. And that's why it's so hard to change and why it can be so difficult to do. Entrepreneurship in general, social entrepreneurship is even more difficult because you're violating multiple kind of norms. And then to try and do the capital side of things as well, it's perhaps even more entrenched.
So Soul Capital was formed in 2014. Tell us about the build up to that and that sort of a moment where you plunged into it and made it happen.
This was during my PhD. So during that time, I was doing some advisory consulting work for a large international NGO, Poverty Alleviation Development NGO. And through that exposure to international development world and working in extreme poverty, and my job there was I was charged with thinking about alternative business models to enable greater impact. And that's where I realized that things like social enterprise, social entrepreneurship, although I had that background in it, so it was relatively obvious, had real potential in that context. And that started the conversation that was Soul Capital with a bunch of people that are far smarter than I, but also some experiences in the field, so to speak, meeting with people in developing country contexts, some child soldiers and refugees in Rwanda and so on, and them telling their story very bravely and then saying, well, it's my obligation to do what I can. You've done so much for yourself to carve this amazing life after that start in life. The least that we can do is to put our energy and time into doing the best that we can for people like yourself and others. And so, that's really just more kind of background motivation, but Soul Capital was the conversation. And then post PhD, it was time to really dive into it and stop treating it as a side project or a side hustle, as it's called these days, and not be that advisor consultant, to lead it as an entrepreneur. And that's where the more proper entrepreneurial story of me and Soul Capital really begins, I think.
Was it always called Soul Capital? Love the name.
Yes, it has always been called Soul Capital, with all its multivariate implied meanings and that people see in that and what it means for different people. But it kind of says, yes, it is capital, not just all financial capital though, but it's got that deeper kind of purpose behind it. So we kind of put that out there loud and proud that this is what we're about. But yeah, so that when I started really entrepreneuring it properly was to really focus on the New Zealand ecosystem after having an international focus, because we really, really needed it. Like I said, I was trying to raise capital and people didn't really know what I was talking about and nobody was really doing it in New Zealand. So it was a bit of a challenge, but it was about just trying to create an entrepreneurial ecosystem in New Zealand that had a direction, had purpose, and that the social entrepreneurs in in New Zealand could access the capital that was aligned to what they were trying to achieve, rather than trying to twist it to fit a VC or trying to twist it to be appropriate just to philanthropic capital. You need that investment capital with purpose.
So I imagine you, with the slide deck, you've made the decision to double down on this and really take it seriously and grow it. You had quite a lot of learning to do. Do you look back and think I was quite green? And it was some key people who helped you along the way at that point?
Absolutely. Very green. And like many entrepreneurs, didn't know what I didn't know. Actually, that's not true. Because of my background, I knew I'd got used to knowing what I don't know, because that's one of the curses of being an academic, is it's just a pursuit of realizing how little you know in the scheme of things. But yes, very naive, and kind of an idea that I didn't really know what shape it had before it coalesced into, okay, we want to mobilize capital to connect it with social entrepreneurs. That can take multiple forms. We thought the best form, probably a fund, and that becomes challenging because you need to go and raise that fund, and people didn't really know what I was talking about. I had no credibility per se. And some key people there, Dave Curtis, who's one of my co-founders and director, based in Melbourne, that I'd met in those early days, was instrumental. And then Deb Shepherd, who was, supervised my master's thesis and so on, joined the team. So those people were instrumental, but also taking that entrepreneurial approach to doing something, which is, by the way, kind of unusual when it comes to creating a financial management entity, an impact fund. Entrepreneurs are generally leading a venture rather than being the investor. So it's doubly difficult to get something like that up, because you're asking people to put their capital at risk, and something that doesn't have a track record.
And is this where the story gets really interesting? Is this what you realised, that actually you needed to be that sort of lead funder? Like you needed to put your own money in?
Yeah.
Was that always the plan?
I think it is. I can't remember whether it was always the plan, but there was certainly a realization that, and this is not an unusual founder's story, but realization that if people were going to trust me with their capital to do this thing, which hasn't been done yet in New Zealand, and that they, as much as they may be inspired by the intent of, these ventures and entrepreneurs that will deliver social environmental impact and that kind of thing, they needed to, I guess the most powerful way which they could have some faith is that if I did what I did, which is to borrow money against my house to put the first capital into the fund.
Was that hard to do? In a practical sense?
It's a very risky thing to do. Venture capital is extremely risky at the best of times, let alone when there isn't a track record, and into a sector that doesn't exist like I was doing. You need to have some interesting conversations with the bank, and potentially with your family and so on. So yeah, it's a crazy thing to do in hindsight in many respects, but I had spent so much time and gone through so much to try and get it to that point where it could be something, that I would preferred the pain of that would have been a very, very significant financial loss, as to not have ever given it a crack.
Yeah. And at what age were you at this point? And how did it feel big, because you had people staring at you going, hey, wait a second, this is our house. Our life's going to be difficult if you, did you have this sort of age on your side that, this was, I wasn't, how old was I? This would have been at around the age of early 30s. And so it wasn't like you're in a position where, which is the case for many young entrepreneurs early out of uni, where it's a great time to take risks because you haven't kind of loaded yourself up with the consequences of putting your family out on the street and that kind of thing. And you can sacrifice the income and so on. The thing with my journey though, Mark, was that because I'd been so dedicated to this kind of mission, I guess you could say, of doing a PhD on social entrepreneurship and trying to get as knowledgeable as possible, and then doing something which was a startup without income and that kind of thing. It was, I was privileged enough to, own a home to take this loan out, but not in the position where I was comfortable, let's say. So it would have been a pretty awkward outcome if things had gone terribly wrong.
It's not to say it's gone, yeah, I've proven the point and it's been wildly successful. That's going to depend on the companies and the fund. But it's it's enabled, I guess what it has done is help me build an enterprise which has the credibility that can now go on and become something at scale, such that was a sensible investment to make.
Yeah, because you're at an age where you've got responsibility. It's not extra money, like you potentially lose your house if it doesn't work. In your words, it's at that proof of concept phase. And then on top of that, it's actually on the venture side, right? So these are startups. And so, there's no guarantee that they will be successful.
Yep.
Did you lay awake at night making that decision? Or did you just, like you said, all of that work that you'd done, it just felt like destiny, and actually the disappointment you knew you would have if you didn't do it was just enabled you to stay calm?
Yes, and that's certainly the story I tell myself. In that would be a preferable outcome than to have died wondering. I'd rather have lost that money. Don't know if I would have lost the house, but it could have been awkward. And I'd rather have that than to wonder, what if I had actually given it a proper crack. And the other thing it does is when I was talking to potential investors and they were high net worth or certainly in a better position to be investing than me or their institutions, could say, well, look, my capital's in this. I can afford to lose it far less than you, and that gave them the confidence that I was going to work my ass off to manage it well, to deliver the impact outcomes, yes, but also that I had real skin in the game as well. So I think lots of founders face a point like this, whether it is leaving their job with a stable income, or whether it is saying no to a job, or whether it's borrowing against their house or something similar. There is that point. There are points like that where you say, well, for whatever your motivation is, you're going to have to take that risk. Otherwise, everyone would be doing it.
And so you create the fund, others join you. And can you talk about the size of it and a bit about what you did then and how you went about that process to find the appropriate investments?
Sure. So this is the RFE fund, we called it. And it's like I was saying before, it was, there wasn't much going on in New Zealand in terms of impact investing and this kind of capital. So I couldn't do anything sensible. That was obvious. You couldn't raise a sensible sized fund and manage it and charge management fees and that kind of thing. If you were going to at that time, you were going to have to be pretty commercial, such that it probably wasn't going to be genuine impact investing. So what we set out to do was kind of just prove the point, raise a little bit of capital and do some deals, and so be able to educate the market and say that's what we meant. That's what we mean by a venture that can deliver a financial return alongside social and environmental impact. So that was, conversations with some organizations and some other people in our networks. And it was hard work. There wasn't a lot of traction, to be honest, to say, here's an opportunity. And at that point, as a completely new entity that Soul Capital was, you're kind of in this chicken and egg situation where you need the capital to be able to attract the investment opportunities, the ventures, but you also kind of need the ventures to be able to prove the point to the investors, say that's the kind of thing we'll invest in. So it was kind of a circular conversation and just market validation, really, for a period of time there. And then I tipped in some money, and an investor in Melbourne was inspired by what I was trying to do and tipped in some money. So then we're only talking hundreds of thousands of dollars at this point. So at least we could start doing some stuff. And then a few more investors came along, still crazy small fund. And then we wrote some really small checks in the scheme of things. But the response was really validating in that these founders and entrepreneurs, like, well, finally, we've got someone who's kind of speaking our language and asking the right questions about the impact we're trying to have and how it aligns with our business model, and so on. Because that is, as an impact investor in the early stage, or actually in any type of asset, this is what you need to dig into, right? You need to be convinced that the founders or the lead team have a genuine understanding of the problem they're purporting to solve. And you need to be convinced that the business model is going to deliver impact against that problem. And they should understand that ideally in a systemic kind of way. And then all the other things that any investor needs to see in an investment, in an enterprise.
Are there is it the same approach in terms of, you hear investors talking about investing in the people?
Yeah.
And if so, is there an investment that you could talk about where it stood out in any way?
So the first question, yes, particularly in early stage, where so much about the enterprise is unproven. you're really primarily investing in the people and your belief in their ability to grow this thing. There needs to be a market as well. You need to believe that there is actually a market that they're going for, but you're really backing the founders. Those are the horses that you're backing, such that they will change the idea if they need to and respond. So it's all down to their ability, really. And that's the earlier the investment, the more that is true. And when it comes to impact, I think that's even more so, because you really need to believe that their commitment to delivering that social and environmental impact is fundamental to what they're doing. It's not just a veneer that they're wrapping around their business to attract your money. There's a couple of examples just from that fund. Actually, there's none of them where this isn't true, but I'll give you some contrasting ones. So Ben Gleisner of Kogo was Conscious Consumers at the time. So I met Ben back when I was we just set up with some other people an entity called Social Enterprise Auckland, and we did a big event. And Ben had just raised some money from friends and family in Wellington. He said, "I need to come and speak at your thing." And I was like, okay, Ben, come and speak at our thing then. And he told a story of raising that money, and it was like, that was a really cool story, because this hadn't really been done much in New Zealand. And then I was able to, when he did his next round, which was his first proper quote unquote raise from more sophisticated investors and angels and so on, was able to sign his term sheet and be the first money in. And so that was very validating. But with Ben is kind of the quintessential entrepreneur in many respects, in that he's highly capable, and has succeeded in multiple different aspects of his life, and now is very kind of comes across as experienced, highly knowledgeable, very capable as a business leader.
Yeah,
great. In contrast, another one which is some of the most inspiring humans I've ever met is Kara Technologies, which is and people can look at this on the website. So having artificial intelligence-driven hyper-real avatars to translate all content into, like this podcast, for example, potentially, into sign language in real time.
Wonderful.
So highly capable people, but young, not as experienced, different end of the career spectrum than Ben in many respects, but highly capable with PhDs, etc. And just the most genuine humans who are learning how to be founders and leaders, business leaders, whilst technologists, but also just genuinely wonderful human beings. The kind of people we're saying, actually, you should just take any money I've got, you should have it, because you're going to do amazing things with it. Doesn't work like that, obviously, but yeah. So I'm cherry picking, and I feel bad because everyone in that portfolio is just most wonderful people. That's if we don't have that connection, then it's really hard to justify investing.
And so, as an investor, do you guys go that step further, beyond capital? And you touched on this before. So for the Kara, it was around helping them maybe connect them to others who have experienced business people, or maybe it's another way you can help beyond money.
Yeah, and this is investment fund management in general. With that, after the transaction, you've got this portfolio of companies. Then there's a investment management function that you continue delivering. So that is to support the portfolio for your investors and so on. And that can take many different forms, from just general advice and support through to connecting, opening up your networks and that kind of thing, and various other things as well. And so, as an example, someone like Ben didn't need a whole lot from us. They had a highly capable board and good people around him. Someone like the Kara Tech team, far younger. And so we helped them with advisors and said, this person should be on your team. And they said, that's a really good idea. So that's that person's now their chief business officer. They now sit on their board, and so on and so on. So the difference here, though, with impact investing is that you've got this other dimension that you need to support them on, which is making sure they're maximizing their social environmental impact, but balancing that with their commercial imperatives as well. So it's and then also making sure that they're measuring and monitoring that, so that they can enhance that impact and report to whomever they need to report to.
It just strikes me that you're continuing to study. You're a lecturer, still very much part of the university. Does it feel really good to be entrepreneurial lecturer, but one who's actually put his money where his mouth is? You've taken risks, you've taken that, you're on that journey. Does that feel really good when amongst colleagues, maybe to feel like when you're doing that teaching, it comes from a point of experience?
It feels very hard, to be honest, because being an academic is a hard job to do at the the best of times. It's pretty challenging. If you need a PhD to even apply, it's not an easy job. So doing both simultaneously is very difficult. But yes, you're right. There are moments where it's very satisfying. And one of them, yes, is the teaching. So I teach innovation entrepreneurship and a bit of strategy. And one of the things that would-be entrepreneurs find really interesting and people they find difficult to access and very mysterious are investors, particularly venture capital investors. So having one as your lecturer, I think, is quite interesting. And it has obvious impacts in terms of the stories you can tell and the way you can bring content alive. So yes, I guess that does feel good in the sense that we're not just talking about something from an abstract data-driven kind of perspective. You can do that plus bring it alive with the stories and help demystify this process, because people are very put off by the idea of entrepreneurship. They think it's entrepreneurs are because of the celebrity aspect of it, they think it's some magical mystery wizards who've got superpowers that they don't have, which is the opposite is true. So yes, there is that. And then from a research perspective, there's a natural innate understanding you have of the practice of which you're trying to research. There's obviously help with accessing people in terms of data collection and that kind of thing. But you can use both, bring both worlds together to paint a deeper understanding of which we're trying to figure out. Which, by the way, one of the reasons I do both is it's not just about going out and doing impact investing and social entrepreneurship and let's just do more. There's a bunch of knowledge we don't have that we need to have to change the way we do our economy, the way that we do policy and that kind of thing. And so the research side of things is still, I think, a critical part of the movement.
And you can see how that really adds value. And the future for Soul Capital and the future for yourself?
It's getting a bit hectic with the two jobs, of course, and the point where I need to have the salaried job to underpin the Soul Capital side of things is pretty much past now. So it's really just the motivations on the satisfaction I get from both worlds. But the fund that we've talked about, that's fully deployed now and it's kind of served its purpose. And from a Soul Capital perspective, albeit we're still supporting those enterprises to be as successful and as powerful as they can be. And so now we're on to our next fund, which has Foundation Newth as its cornerstone limited partner. They're the first investor. And that is very exciting to have Foundation Newth in the impact investment game in New Zealand.
So they're a large community trust, aren't they, with 1.3 billion funds under management or endowment, that sort of level?
That's that sort of level, yes. So very large, but also very important is the way I would describe them, and very potentially powerful in this sense that community trusts, like we've seen with some of the more private foundations in say North America and across Europe, can use a full stack of capital to bear on their purpose. And so we're managing their fund, and they've done something really admirable with the way that they've designed it and making it an impact first fund. So they're prioritizing the impact over the financial return, and they've wrapped their priorities and organization around the mandate of the fund. So that is, prioritizing Tamaki and Taitokerau, so Auckland and Northland as a geography. Good things tend not to just stay in one geography, of course, but that geography and prioritizing their impact themes of increased equity, increased social inclusion and regenerative environment, and their priority communities being Māori, Pacifica, rainbow communities, whānau living with a disability, and refugees and recent migrants, and trying to have increase equitable access to this type of capital for those priority communities. And so that's an example of their power, right? Because very few organizations can come to this space and say, let's prioritize equitable access here. Not many investors have that mandate, let's say, and they are realizing why they exist as an organization, why they hold on to that $1.3+ billion, and how they can start deploying their investment capital, not just their grant capital, to achieve the work.
Because on an annual basis, their endowment, gives them close to, I think it's 40 to 50 million, which they invest in communities through philanthropy and giving. And this is a move for them into something else. But it's at that end, we talked at the beginning, but it's more at the end of very much focused on the social impact, and they could take a hit on the financial return.
That's exactly right, where need be. And a lot of people, when you say impact first, think, well, that means you do soft terms or lower rates of return and that kind of thing. But like I was saying before, Not necessarily, except where that is necessary or appropriate to enable the impact to happen. What it does do is enables us to spend more time and money making sure that this capital is getting to where it needs to go. So we can call those the quote unquote transaction costs, i.e., to get into communities where opportunities aren't just necessarily going to show up in your inbox or come knocking on your door. You need to go and properly originate those investment opportunities to turn these projects into investable deals, or to structure them with some instrument which protects the impact but also enables the venture to grow, or transitions ownership to, in our case, to say iwi Māori as a priority in many cases. And all these things are very difficult and time-consuming and require extra due diligence and so on. And so this mandate allows us to really lean into that, because that is what will actually make the fund different, not just saying, well, we want to invest just for these purposes. So, yeah, hats off to them, because this hasn't been done before in New Zealand.
Yeah.
Really going impact first like this. But it also demonstrates the point I was making earlier, that impact investing covers a real range of types and flavors of investment.
And someone out there sitting and listening to this, they love entrepreneurialism. They would like to do something in that space, but actually they also want to make a difference to the world, environment, to society. Your story is a really good story, because you actually wouldn't be partnering with Foundation Newth. They obviously have huge faith in you, what you've achieved. But if you hadn't have had that clear vision from the beginning and then proved the concept and been enduring, what would you say to people listening out there that have, similar desire to do what you've done? Maybe not investment, but what would be your advice to them?
Yeah, be careful here, Mark, because I teach this, I could start a lecture for an hour or two. I guess if there's one thing is, one, don't think you can't do it because of what you think is the skills that are required or the attributes that are required, and you don't have them, therefore you can't do it. You're never going to have the complete set of skills that you need to lead and grow your venture. No one ever does, but you need to start. First thing, open to the idea of putting it out, saying to people that you want to be an entrepreneur, that you want to go and do this thing, which for many Kiwis is a challenge in itself, to say, I want to go and do this thing, which is not just go and get a job. Once you do that and you're open to learning, you're hungry to learn, you listen to people's feedback, you will learn really, really quickly, and you will figure stuff out as you go at the speed that you need to. Second thing is, for people who think they do have all the skills and they are super highly capable and that kind of thing, is be really conscious of what you're not strong at, because whether you are in the first camp or the second camp, you're going to need people around you. You're going to need to build a team, and you should build a team that is complementary to your skills and abilities. So think about what you're not strong at, and make sure you're solving for that as you find your co-founders and that kind of thing. But if there's a single thing, whether it is you want to start a not-for-profit NGO, a traditional commercial entity, or something hybrid like social enterprise, social entrepreneurship, and so on. First thing is, I think, if you get started, and you will learn in time, as long as you are open to it and you put your hubris and your ego aside. And if you are purpose driven, and I get this question a lot, and people who listen to your podcast would have heard from a lot of not-for-profit leaders and some social entrepreneurs and that kind of thing. I get a lot of questions around, should I be a not-for-profit, or should I be a limited liability company, or what do I do here? My advice is be agnostic about the form and choose the form over time that makes the most sense for the impact that you're trying to have. Don't make it a moralistic kind of thing. Make it about what is going to serve the impact you're trying to have.
Great advice. Yeah. And the future for capitalism, future for business, and this idea that businesses just aren't about, or not going to be about, just delivering shareholder return.
Yeah. And
we've got a B Corp movement, which is really gaining traction, and actually imperative for a lot of customers. They'll choose Patagonia over, another mountain wear designer, because they know that they treat the staff well, the environment, all that sort of stuff. But what do you feel like that is the direction purpose and profit are going to be the focus for almost all companies in the future?
Yeah, I think that much we can be pretty confident about that. And this goes back to the point I was making earlier around the logic that underpins these formal and informal institutions which structure our economy. But one of the things that has moved is that our expectations that we have of business. And even if it's only because as consumers we demand businesses that are more conscious, more sustainable, more whatever, then that is shifting what's normal from a business perspective. Let alone the power that we're starting to realize as with our pension funds and KiwiSavers and wanting to screen out things we don't agree with and where our money sits through responsible investment, ESG kind of stuff. So that I think is normal. What I'm seeing at the university, and obviously as an investor, is a generation of entrepreneurs that are kind of take all that for granted because they grew up with it. They grew up with corporate social responsibility as normal. And so the next thing for them is that doesn't require any kind of convincing or inspiring, is that they want to have their purpose aligned with where they put their energies. And employers are seeing this in terms of making sure they got meaningful work and that kind of thing. But also from an entrepreneurial perspective, it's just a no-brainer for them that they're going to, at the very least, have a business which is strongly sustainable, but increasingly is actually trying to solve a social and environmental problem quite directly. So from that perspective, yeah, I think we're pretty close to a new normal in terms of the public discourse. We've got some big challenges in terms of where we get our energy from and that kind of thing on a global scale. These kinds of things which will take arguably too long without some pretty strong policy intervention. But I think you've probably got others who will speak to the climate change challenge in more depth. So yeah, so there's it's funny, I walk in two worlds in many respects, some which with things like impact investing, which is very practical, pragmatic responses to trying to have a more sustainable and inclusive form of capitalism. And then some of my research, particularly in my Māori and Indigenous enterprise investment and economies kind of work, where we're thinking about what a Māori theory of value means, it kind of takes you to a completely different form of capitalism or a different form of market-based economy, which is a whole different kind of paradigm, which is pretty challenging to jump to that. So yeah, it's interesting stuff.
Jamie Newth, it's been an absolute pleasure. Thank you for joining me on Purposely.
It's been a pleasure. Thank you, Mark.
Thanks for listening to Purposely Podcast. Please subscribe and leave a review. I hope you like what you're hearing, because I sure do.